Thanks for joining us at xm.com for this Forex Preview video. We'll be having a look at Canadian jobs. I'm Cristina Marujos. Joining me today is Cristina Barcenido, investment analyst. Canada's first jobs report for the new year is out on Friday, Cristina, and even though markets are anticipating a soft report, it's unlikely to be a game changer as it will probably reflect January's lockdowns. However, the report does have its significance as it will likely point to the direction the Bank of Canada will go at its next policy meeting. So what should markets anticipate?
Hi, Christina. Indeed, given the lockdown measures, it wouldn't be very surprising to see another weak employment report out of Canada Friday. We expect a softer decline of 47.5 thousand in employment, but this is not a dramatic change from the 62.60 thousand downfall in December, but likely is enough to push the unemployment rate higher for the second consecutive month to 8.9%. Probably the data may not move the Canadian dollar, though I think this will still be worthy to look at because, as you said, that could give us some direction about what the Bank of Canada's next decision will be. In the previous meeting, the bank didn't deliver a micro rate cut as analysts expected, but it didn't entirely exclude that case either, saying that lower interest rates within the positive area could still be part of additional stimulus if the virus conditions moved the wrong direction. On the other hand, the bank also expressed its hawkish side, saying that it's optimistic about the economy, that the economy could rebound in the second quarter if the government removes restrictions in the first quarter, and if it gets confident that the recovery is sustainable, then it could start to taper its asset purchases at a gradual pace. So Friday's employment report could indicate which one of those cases is more likely. For example, if the data come in much stronger than expected, then probably the odds for a rate cut would decline and the odds for a tighter monetary policy may increase. However, it would be wiser to wait and see how the next employment report in February would look like before we make our final conclusions about how the Bank of Canada will react at its next policy meeting in March. For now, January's employment report may not show a bright picture, but rather support a weak, perhaps a negative GDP growth figure in the first quarter, which is more or less priced in.
And now turning to the loonie, it got a small boost this week from elevated oil prices. However, it seems unable to gain in the grander scale of things. Can the jobs report out on Friday pressure it even further?
Well, unless we see a sharp deviations from forecast, I don't think that the loonie may react on jobs data. Markets are almost certain that the lockdown has pressured the economy, so weaker data are normal, as we said before, and this won't be any surprise. However, technically, I think that the loonie is at a less favorable position against the dollar, especially if the 1.2760 level manages to hold a strong footing under dollar loonie and the 1.2845 to 1.29 area proves easy to break on the upside, then I think the US dollar may gain extra ground. We shouldn't forget that the US non-farm payrolls are also coming out at the same time on Friday, and the talks around Biden's stimulus package continue in Congress, so any updates on these topics could disturb market sentiment as well.
Cristina, thank you for joining me today, and thank you for watching this Forex Preview on the Canadian Jobs Report here at xm.com.